Hello and welcome to Trading with Technical Indicators. My name is James Boyd. We welcome you here today. In the chat, we have with us Brent Morris. We welcome him. And hopefully all of you had a great weekend. Me and my wife were watching our granddaughter, and it was a great time. So hopefully you enjoyed the games yesterday and the matches down under. We're right back at it. Now, quick heads up. John McNichol used to teach this class. He's going to be out and about serving our country. So I'll be taking over this class going forward. Now, just real quick, as we get started, I want you to kind of think about this question. Do you struggle to track price performance, types of stocks or trends, momentum, relative strength, bounces, breakouts, crossovers, or flags? Now, if you feel like that's you in terms of like looking at a new watch list or your current positions, we can stop that today. I've been asked by many of you in the feedback to kind of really go over how do you find stocks for classes. And so I want to kind of go over some criteria that some investors might use to find those stocks. So what I want to really be doing here today is we're going to kind of, there's going to be a teaching part of this, but then there's also going to be a trading part. Okay. So just real quick, we're going to hop right in. Remember, as we get started, remember the information here is for general informational purposes only, and should not be construed as a recommendation of individualized recommendation or endorsement of a particular security, chart pattern, or investment strategy. Also understand that options carry a high level risk, not suitable for all investors. Also, when we talk about, let's say, multi-leg option strategies that can involve multiple transaction costs, short options can be assigned at any time up to expiration, regardless of the in-the-money amount. Also understand that Schwab does not recommend the use of technical analysis as a sole means of research. Past performance is not guaranteed of future results or success. And also remember that investing involves risk. Now, today, what I really want to be doing is I want to kind of talk about what are some criteria oscillators that an investor might be using to track a current portfolio and or a watch list. And if you don't mind, we're going to kind of show both here today. And I'm going to kind of go down through column heading by column heading of what are some of the criteria we're using and why. So with no further ado, let's hop right in. And by the way, the second part of this is what we will be showing is, I want to bring this up right here. So many of you know that this is found on my Twitter page, okay? My handle is @JamesBoydCS. I do not reach out and solicit anybody, etc. If that does happen, it's not us. Thank you for the heads up on that. Now, just real quick, I'm going to kind of guide your eyes to this. And what I want to do is I want to kind of talk about really what an investor might track. I want to talk about the meaning of it, and I want to talk about how to use it. Okay? So if we said, well, why would I care? Well, because this is really the process of what an investor might be doing on a daily basis. Okay, so kind of important we bring this out. What to track? Question mark. Okay, what is the meaning and really how to use it? Now, first thing, what you need to really understand is when we look at, let's say, a script. Okay, and let's say this for the first time. A script is not guaranteed for accuracy. You want to understand what is the script trying to tell you, and also verify that it's doing what you want it to do. Okay. So when we talk about these column headings, as I will highlight, the biggest things is they are a script. Another way to say a script is a scan. Now, this might shock you when I tell you this. If you said in 2023, technically, how many scans did you run in 2023? Technically, 0. Okay. Now that might surprise you. And you're thinking, you probably in your sense, like, wow, I do a lot of scans. Well, the scans that we do are the scripts on a watch list. Each column is a scan. It's scanning for something. It's updating. It's tracking. Okay. So if we kind of said, well, if we said script and scan is the same thing, we look at it all the time. Okay. Now, the biggest thing is if you take a look at this, the index focus. Okay. We like to use the example of Dow 30, NASDAQ 100, and the S&P 100, okay? So really when you kind of think about that, there's probably like 200 stocks, okay? Why is there not 230 stocks? Well, because some of the stocks in the S&P are on the NASDAQ, some of the stocks in the Dow or in the S&P 100, et cetera. Some of them cross a little bit, and some Dow stocks are on the NASDAQ, okay? There's probably 200 stocks. Now, if you want to open it up further to the S&P 500, have at it. There's reasons why we talked about that, like airlines, like casino stocks, like home building. Those are probably not going to be all the time. Those are more situational. We want to talk about what might happen 90, 95% of the time versus 5 to 10% of the time, okay? Now, notice it doesn't say Russell 1000 or Russell 2000 because that volume is very important here, okay? We're trying to find something that has stock volume and option volume. That way, if we did, let's say, a stock or an option trade, that there's potential liquidity at that point in time in evaluating a trade, okay? Now, what I want to kind of now do is kind of go through these columns, and I'm going to go down one by one. I'm going to talk about what and why, okay? So I don't know how many of you do this, but when we look at the last column, okay, so the last column is right there, okay, right where I'm pointing. What does that tell us, okay? If we're in the pre-market, like this morning, it was the previous market day's closing price. So if it's Monday, the previous market day's closing price would be the Friday close. Well, why does that matter? Well, the biggest thing is we're trying to, from that, we're really trying to see what was that closing price. If the market is open, this is the last traded price, okay? Now, why is that of potential interest? Now, there are some investors who look for pre-market activity. Well, when we look at the bid and ask of that stock, we want to see is it higher, okay, or lower in the pre-market. If it's higher than the last price in the pre-market I'm talking about, it could be gapping up. Some investors like to see those stocks that could be gapping up, and could they continue to run, or could be gapping down. If we're looking at the bid and ask during the market day, that gives us a sense of liquidity at that point in time. So if the spread is between, let's say the bid-ask spread is, let's say, a penny wide, gives us an idea of what the liquidity is. If it's 5 cents wide, 10 cents wide, 20 cents wide, the wider it is, the less liquidity there is potentially at that time. Verify, okay? Now, when we take it, for example, like net change, and then we look at percent change. Now, net change, a lot of times, we don't look at net change a lot per se, because it's not really fair. If we took Chipotle or AutoZone or O'Reilly, it's not the same as looking at Bank of America or JP Morgan, okay? So net change just kind of tells us the dollar amount, but what we really track by is percentage. We try to compare apples to apples per se, and we're trying to rank by percent movement. So when we put the percent change up at the top, we can click on it and rank by percent. And this kind of just tells us the scoreboard, what is happening at that time, which, by the way, tells us something about momentum at that point in time, okay? Now, just real quickly, I said this is kind of the technical analysis, but there are some investors who, for example, they like dividend yields. When we look at the column of dividend yield, it tells us something about what type of company we're looking at. If the company is probably paying a 2.5% yield or higher, they're probably a more mature company, okay? They're probably a company that tends to have lower implied volatility and lower potential price volatility. Not always, but historically, that's probably pretty accurate. Now, the biggest thing is if it's a growth stock and they don't pay any dividend at all, well, they tend to be a little bit more volatile. And if they're more volatile, they might have a higher implied volatility and a higher price fluctuation, okay, or a higher ATR. Now, the biggest thing is, I'll just kind of say this, kind of going line by line here with earnings yield, okay? Why do we care about earnings yield? Well, if you follow us in the fundamental class, you know that when we talk about earnings yield, we're looking at, that's the trailing EPS divided by the current stock price. Who cares? Well, people that look at fundamentals care. The higher the percentage is, it probably means that the current stock price is trading below its intrinsic value, which means it could be trading at a discount. If that percentage was low, that probably tells us the stock price is trading above its intrinsic value and it's trading at a premium. And some investors like to buy things when it might be potentially on sale, perhaps, and that's why we like to have that column right there. Now, where this starts to turn more technical, okay, is when we, and by the way, there's going to be examples laced in here, okay? One of the columns is called IV plus T, and really the T stands for technicals, okay? So the number in the box is the IV percent, okay? The number in the box is the IV percent. So if I scroll back up and say, okay, IV, what do we got here? What is this telling me? Well, I'm going to kind of pull up one, and this was taken this morning. Microsoft. It has a number of 70. Okay, 70. That's as of this morning where I'm pointing to. Now, if we pull back up right here, where's that number coming from? Well, let's pull it up. So if I pull up the trade tab and we go down to the bottom, you've seen this before. We go down to today's option statistics. The number in the box represents the IV percentile. Do any of you as investors like to actually look for stocks that have high IV? Okay. What tells us it has high IV? The percentage, first off, that's not telling us that it's at the highest. That's just saying the current IV percentile. Okay. But that is pretty high. Why is it high? Well, because there's earnings upcoming. Okay. Now, what you're now going to notice right here as we scroll back down, what does the colors in the box represent? Well, what you're going to notice is that it represents the technical part of this is looking at the moving average, MACD, and stochastics. That's what that's looking at. So if, and by the way, if we get like a darker color green, it means that the price, the moving average, MACD, and stochastics has been up for more than 3 days. If it's light green, it's been up 1 to 3 days. So it's not just looking at the IV percentile, but it's also looking at the technicals. And people like to kind of use that in combination. Now, don't worry, we have some trades on that in just a moment. Now, if we saw that the box was dark red, what does that tell us? Well, it tells us that where the moving average has been down for more than 3 days, the MACD has been down for more than 3 days, and so is the stochastics, okay? Now, you might be wondering, where do I get the scripts? Well, if you go right to the Twitter page, and I just want to kind of show you this, all the scripts that we use in class, they're located right at the top. If we said, where is IV percentile? And I said, oh, it's right there. And what I need is that combination. And that combination, let me write that down. It is case sensitive, okay? And what you'll notice is we'll put that on in just a moment, okay? Now, when you look at, let's say, now, by the way, that's very important because especially if you like to buy options or sell options, you like to see what that percentile is. But if you also like to trade the technicals, you also like to see that as far as kind of the component as well. So now, if we go to the MarketWatch, okay, I have a list of Dow stocks, okay? Now, how did you even get to this list? Well, we went to MarketWatch, and what I'm first going to do is I'm going to kind of move this left sidebar. Let's close it, okay? Now, what we're going to do now is we're going to hit the drop-down box. We're going to go down to public, and then we're going to go right down to Dow Jones Industrial Average, okay? If I click on Dow Jones Industrial Average, what we should all have the same is the stocks. This is not my list. It's a public list. Hence, that's why they call it public. Now, what's different between us, perhaps, is what columns you're using to track their price performance, the momentum, the trend, the relative strength, the timing, etc., of the stocks that are listed here. Now, by the way, they don't have to be stocks. They could be stocks, they could be sectors, they could be indexes, etc. You can pull up whatever your list, whatever your heart wants. We just need to really have a list of probably less than probably 40 stocks, max 50, to crunch the data. Now, how do we put that on? We're going to go to the very top right. We're going to click on the gear. We're going to go to where it says open shared item. Okay, top right, click on the gear, open shared item. We're going to type in the code that we saw right on that Twitter page, 3S. Okay, now remember, it is case sensitive. The only thing that we had in there that was not was that lowercase y. If I now click on preview, it now says, now, by the way, I am using the Schwab paper money platform. that script was from the historical, it's still able to pull up, and I'm just going to call, what do I want to call this? I'm going to call it IV percent plus T. And the T just stands for technicals. Why are you not spelling it out? Because I want there to be more, space, okay, for other things in the columns, okay, import. Now, where does it go now? Well, these column headings, what I can do is right-click on any of the column headings, right-click. I can go to where it says customize. Right-click on any of them, customize. What we're going to do is we're going to put IV, okay, percent. Let's go down. IV, there she is. Okay, right there. Okay, and I put a little space in there. We're just going to add that item. Now, what I'm going to do is I'm going to take off one of these so we just kind of have some things we're focusing on. IV percent, click on OK. Now, what we can do is we can click and drag these wherever we want them to be. I'm going to put these right here. Now, the one thing I do want you to really understand, and people have been asking, a lot of times people don't understand is, hey, where do I find out more about this? If you right-click right on the heading, right-click on the heading, and then go to Edit Formula, this is going to give you a summary of really what that script is trying to do, okay? So if I right-click on the heading, click on Edit Formula, you're now going to see it. And so one thing is, what do the colors represent? As I made mention of, dark green means prices above the moving average, MA, MACD, stochastics for more than 3 days. I said that, okay? What does a light green mean? It's within 1 to 3 days of the price above the MA, the moving average, MACD, stochastic, okay? What does gray mean? It's in the middle, okay, etc. And you could scroll down in there and see more information about that. But each one has a little write-up describing what it's trying to do, okay? Now, I want you to kind of take a look at this is, if we look at some of the stocks that have high IV, of course, Boeing has been pretty high. It's gone down a lot. There's been some issues, of course. 72. There's Microsoft right there, 71. Disney, 68, earnings upcoming. Amgen, Cisco, and Caterpillar. Now, if you're an option seller, some investors might like that. Now, look how many of them are lighter green or green. Caterpillar is, so Cisco, we have Disney, and you have Microsoft, okay? Now, let's kind of really get into the meat of those oscillators. Now, so IV plus technicals is interesting because you're not just looking at the what the implied volatility is. You're saying, I would like something that has a trend as well. And that's what that does, okay? Now, a lot of times what I've seen historically is people just tend to say, oh, I just want something with the implied volatility. The problem is looking at the trend might make sense, okay? Now, just real quick, what I want to do is let's kind of take a look at this next one, which is what's the purpose of looking at the week percent? So the stocks that have the highest weekly percent, those are the stocks that are most likely making pulls. So what I mean by pulls is the stock has gone up, 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 up. And the ones that go up the most, they could be the ones that could be starting to flag back and be the ones where investors start to watch for a pullback, bounce, and then maybe try to go back up again. So someone said, why would I look at the 1 week percent? Because we're looking at stocks that are making pulls. When you say pulls, what do you mean by pulls? The steeper it goes up, the higher the percent, the greater the potential chance of it bouncing, making a higher low. Okay? The nice thing about weak percent is you can't hide the momentum. The percentage is tracking that bullish momentum. Now, if the stock was down 15% in the week, highly unlikely that's going to be a bull flag. Does that make sense? So the purpose of the weak percent is to find momentum. And if you look at all the stocks that you've seen lately that have really done well, they all had a high percent week return, okay? Now, what's the purpose of the month return, okay? That purpose of the month return, the whole purpose there is we are trying to find we're trying to find trend. So if we saw a stock, let's say that was up, let's say 12%, okay? What does that tell us? For the month, it tells us something about trend, okay? Wonder if I said the stock for the month was at 0. It'd be a flat trend. Wonder if I told you that the stock was down 15%. The trend's down. Okay. So without even looking at the chart, we get an idea of what that trend is based upon the percent. What I'm concerned about is when people see the numbers, they don't really understand what it's telling them. Okay. Now, the goal is to maybe look at the stocks near the middle to the higher part of the list. Now, this is very important. Listen right now. Wait, does that guarantee that if they're at the middle of the top of the list, that they're going to go up? Of course not. That's just the foundation of trend. If it's in an uptrend, it's going to stay in the uptrend until it's not. That's the whole idea of trend. Okay, is that it could still trend until it doesn't, which nobody knows when it stops. Okay, until it breaks through support. Nobody knows exactly when it's going to break through support. So it's trending until it doesn't. Okay, that's how trend really works. Okay, and if it was to break down through support, it could then be a change in trend. Okay, so the purpose of the week is to find momentum. The purpose of the month is to find trend. And when we look at the percentages, it tells us something. Okay, when we look at the highest percent weekly, it's probably bull flag examples. When we actually pull out the month, it's going to give us a really good idea of what's had some consistency in terms of trend. Now, when I pull up, for example, this next, which is looking at trend itself. Now, a lot of people, if you ask most people that have been in the market a long time, explain to me how you identify trend. I think most of them depend, and it's not really a clear answer. We try to use the moving averages as a way with price to gauge what type of trend categorization we have. We've heard things like the trend goes up, the trend goes up a little bit, the trend goes up a lot, trend goes up a little bit, trend goes sideways, trend goes down a little bit, trend goes down a lot, right? And people say that, and it's like, well, is that maybe based upon your perception, right? So we want to kind of take that away. When we look at trend, we classify in labeling 1 through 5, okay? So when we look at the column heading of trend, this is where the price is below both moving averages. So what does that tell us about momentum and trend immediately? Down. Okay, would you agree with that? If we have price below both moving averages, we have negative momentum and we could have negative trend. Now, if I were to ask you a question, have you ever had a stock below both moving averages, and did you or did you not make money? And I think most people, if they're being brutally honest, they would say, no, James, that's where I started losing. Now, the dangerous part about this is we don't know where that bottom is, and it could continue to fall down. If the investor doesn't have the stock yet, they might say, geez, I like the price falling down because I'm looking to get in at an attractive level. Okay, so holding on to a stock in that number one, not the greatest feeling, okay, just being honest. And the biggest thing is if an investor is looking to buy, they might start looking at it when it is like in that situation. Now, notice when the price is above the 10 but not above the 30, this is what we call it's regaining that bullish momentum. Okay, and notice we said a lot on momentum and trend here today. Okay, if we have a number 3, prices above the 10 and the 30 period moving average, we have momentum and trend. Okay, now if we see it's in number 4, it's above both moving averages. The key is, but it's up near a potential resistance, and might it start to kind of stall out a little bit? Okay, and the last one is 5, the price falls down below the 10, but it's still above the 30 moving average. Okay, so what we need to understand here is 2 and 5s are opposite. Okay, they're opposite. 2 is gaining bullish momentum. We would also classify this as a potential diagonal breakout. Okay, and 5 would be the short-term breakdown, turning into potentially bearish momentum. So if you said of those two, what you like 2 or 5? I think most people say I like 2. Okay, fair enough. So if I asked you a question and I said, of these 5 trends, where do you tend to be the most successful in your investing? I don't think anyone would have too much of an imagination to say, geez, I bet what probably most people are doing pretty good is when they're in number 3. So the whole purpose of actually having the column headings for this type of trend is they're trying to say, do I own the stocks in that type of trend? Second is, if I own those already, are these stocks now starting to shift? Are they up near resistance? 4. Are they starting to fall down through support? 5. Now, if we go back to this chart, what you're going to notice is, without even looking at the chart, but scripts not guaranteed for accuracy, verify, trend number 1. What does that tell us? If I go pull up Boeing, we're going to see the stock price pull up both moving averages. Now, if the investor was in the stock, it's probably been hurtful lately. If they're looking to get in, it might be an example to get in, but you probably need to see horizontal support level. 3, 3, 3, 3, 3. And there's Apple at number 5. So what you're going to notice is there's a whole bunch of 3 stocks above both moving averages, but at number 5 saying, hey, we've broken down below that short-term support level. Now, some investors might say, well, I don't know when to get out. Well, a lot of investors, they use really 4, okay, as maybe an area to try to sell some or all. And they say, look, if it starts to really break down, okay, 5 might be an example where the investor says, look, I'm seeing that break down in the shorter term. The investor might ask themselves, do I want to sell? Where's my stop? Am I considering protection, etc.? So the trend column, which is one column, by the way, that just states the number, and the number is depicting these definitions, verified. So when you look at the column, if we see a whole bunch of stock, if we see that column where it's just green, 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 green all the way down, clearly the market's bullish. We have seen times where that trend column was like a fire truck red, which means the trend of the market predominantly was down and dragging the majority of the stocks down with it. Okay. Now, what's kind of nice about that is we don't have to look at 52 different stocks to know that the scripts can help us for the 3rd time now. Don't say I didn't say it. Okay. Scripts not guaranteed for accuracy, verify. That's why when you look at the chart, now you know what you're looking for if you know what the definitions are. That's why we're taking the time to go through down bullet point by bullet point. Now, is this helpful to kind of go down through column by column and kind of talk in detail? Now, this was asked me by a number of clients. They said, can you kind of talk about kind of how an investor might find stocks, what the columns are telling you, etc. The focus is that the investor would be looking at this on a daily basis to track new potential examples, but also looking at current positions to see how they're faring. Now, where it really gets interesting is when we start to get into what we call relative strength. Now, I have labeled this as RS, okay? Now, historically, we had a tool called the big chart, okay? Now, the big chart, what it was categorizing industry groups. And each column heading was weekly, okay? So it was industry groups, okay, compared to each other. And it was really the time series of it was a weekly basis, okay? Now, with kind of what we do in our examples and how we track stocks, what you're going to notice is we don't look at them necessarily on a weekly basis. We make 2 adjustments, okay? So number 1 is we're not looking at weekly, okay? At least for all of them, all the columns. We're looking at a 5, which is 1 week of trading. The 10 days, which is 2 weeks. The column of 21 is 1 month of trading. 42 would be 2 months of trading. And the 63 would be 3 months. Okay, so let me kind of show you what this looks like. So what you're now going to notice is right up here. Now, the relative strength, 5, 10, 21, etc., what it's really doing is it's showing us, and the goal, just like it did historically, is the investor might be looking for stocks that have had a history where in multiple different time periods, they might be in a light green or green color over different time periods. What does that tell us? The two famous words in technical analysis: momentum and trend. Okay? Now, by the way, does an investor always have to see something that's light green to green? Not necessarily, but I mean, that's not a bad thing. Okay? But sometimes you might see something that was more neutral, then go green. It's the same idea what it was 10 years ago. And if we say, well, James, can we see examples where it goes dark red, light green, etc.? Can I look for those examples? Just like we did 10 years ago? The answer is yes. Okay? So the thing is, that might be something that was down that is starting to increase. Okay? Now, the other thing is the relative strength is not it's not stock compared to stock. It's the stock it's the stock's performance compared to the S&P 500. Okay, now we got to bring this up now. Now we're getting somewhere, okay? So if I were to kind of scroll back down, something very important, one adjustment we made is each column does not represent a week. We added in something like 21 days, 42 days, 63 days to try to see something like a little bit longer type of a trend. Fair enough, okay? Now, the biggest thing is this list that we have, it could be stock-based, okay? It could be stock-based. You can make a list of sectors. You can make a list of an index. It's up to you. You can make a list yourself. And what it will do is it will rank the stocks compared to the S&P 500. Now, that index can be adjusted for the index you want to see. So if you said, well, James, I don't really like the S&P 500. I want the NASDAQ 100. You could simply right-click on the heading, and you're going to see on line about 36 and 43, I believe. You could just take the SPX out and put the NDX in. So that is customizable to who's liking. Yours, okay? Now, a lot of people, they like to kind of say, if I'm going to buy a stock or a sector or an index, what's the momentum been in the short term, but also more on an intermediate basis? And that's the point of looking at that relative strength, okay? Now, let's kind of get into kind of where we look at these just kind of quickly here. Before we look at the trade examples, we also have the 10-day hold, okay? The purpose of the 10-day hold, again, is to show us momentum. So when we look at, let's say, a stock, I think some investors might say, well, James, what I'd really like to find is stocks where that line is green. Okay. James, I'd like that lagging moving average line. I'd also like it where that line was green. Okay. So what does the green really kind of tell us? Okay. So the green really kind of tells us in this case that when we look at the moving average, just like we saw in the previous chart, the moving average line is green. The line is green. The significance is bullish momentum. If, for example, if we said, well, wonder if that column is red. Well, it tells us that if the chart MA line, okay, is red, that means at that moment in time, there's bearish momentum, okay? And the biggest thing that's really nice, and we thank you that who fixed that, which is what does the number in the box represent? What's nice about this is it'll tell us how many days, and by the way, we had this historically as well, but then updated it to here, how many days it's been green or how many days it's been red. So the goal of an investor, they might be saying, look, I'm trying to buy when it maybe goes green day 1, day 2, day 3. If an investor buys it into something where it's been green for 63 days, that trend might be more mature. So that's the purpose of kind of trying to look and see how many days has it been green. Now, if you pull this up, what you're going to notice is What does the 10 hole represent? So first off, if it's a red background, it's been down, the 10-day hole has been down for 3 days. What does that tell us? It's been really green for 4 days. Now, by the way, this white on this background is a little harder to read. And check me on that, it's 14. So Microsoft has been green. And by the way you can kind of double check that is click on it. And you can see it goes blue. It's that 10-day moving average has been green for 14 days. Okay? That kind of tells us something about trend. When I come down to here, Caterpillar's green for been 5 days, 12 days, 7 days, 10 days, etc. Okay? So it kind of tells us what's the color of the moving average and how long has it been that. Okay? Now remember, the purpose of that is to try the investors trying to get into potential momentum and trend. Now, I'm not going to kind of speak to the 30-period moving average because the 30-day haul would just be, instead of looking at, let's say, momentum, we're talking about trend, okay? So instead of the 10, we're going to put 30, or if you want 20. We've talked about both, okay? Now, they're the same thing. The other thing I want you to kind of notice is on the columns, also on my Twitter page, if you are saying, James, I don't really look at daily charts as much, I tend to look at weekly charts. Don't worry. If you scroll up, what you're going to notice is right there, you will also see that it will also show 10 hole weekly, 30 hole weekly right there as well. Okay. And by the way, we could see that there's a bunch of stocks where the 10-day hole and 30-day hole are green, but they're not just green on the daily. They're also green on the weekly charts as well. And for many investors, they like to see that. Okay. So let's kind of recap this. When we look at, let's say, week percent, month percent, etc., we're looking at price performance. Okay. When we look at trend, we're really looking at what type of trend: downtrend, sideways trend, upward trend. What type of trend? That's very important. Okay. What type of trend are you looking for? What type of trends are you currently in? If we talk about, well, relative strength, I like to at least find stocks or sectors or indexes that are outperforming a benchmark like the S&P 500. That's why we look at the relative strength. When we look at, let's say, the whole moving averages, et cetera, we're trying to find stocks where those lines could be green, and we're wondering, could the trend continue on a daily and a weekly chart? Now, in finishing this out here, what you're going to notice is we have columns like Cohold, CHE, et cetera. Let's explain these, and we'll show kind of some examples of these. So when you take a look at this, when we say Cohold, that just stands for close above the high of the low day. That's just a classic, what we call a bullish bounce setup. The key to this is that stock above a shorter term moving average, okay? So an investor would like to see Cohold if the stock was above a moving average. A Cohold in a downtrend is not as significant because, well, you're buying the stock below potential support, okay? And that's what we just call a bullish bounce setup, okay? Now, Cohold, CHG. Now, I'm not saying everyone does this, okay? But when you look at CHG, this is stocks that closed higher from previous day and gap up in the morning. Now, how many of you have seen a couple of stocks in the last week where they gapped up and they ran? How many of you ever said to yourself, geez, I wish I would have bought those right when the market opened? Now, that doesn't guarantee if they gap up, they're going to keep going up, but sometimes, okay? But some investors like to see which stocks gapped. The purpose of CHE, stands for close higher gap, is to see which stocks gapped from the stock closing higher the previous day, okay? Now, here's the funny thing about breakouts, okay? If we saw a 20 DH, which stands for days high, that is really a stock at a 1 month high. That's what we would call bullish momentum. So if someone said, when I look at Cohold or CHE or 20-day high, or a 55-day high, what are these really telling me from an oscillator point of view? The answer is the type of entry and the timing of it. And the last one that the investor might really look at least as far as if we're talking about these, not price pattern related, would just be like a crossover. Do you understand? You can show me any oscillator you want. They all funnel down to three main types: a bounce, a breakout, or a crossover. And by the way, you could say the bounce and the breakout could be really also getting into the crossover, okay? But you can funnel everything down to three things: bounce, breakout, crossover, okay? And that's what's kind of nice is when you simplify like that, okay, you say, oh, it's all funneling back into the same things, okay? Now, the last two things I just want to make mention of, okay, in finishing the column headings out. And the nice thing about this is what I'm really trying to express is you can, for example, have one view, just like I showed when we got started. And from that one view, it's running multiple scans. And you're tracking maybe ideas for new examples, or you're looking at your current portfolio and how it's faring. Now, when we also see the column of like breakout, the nice thing about that is telling us, is the breakout potentially today? Was it testing yesterday's breakout? Maybe it's day two of the breakout, or is it retesting it from 2 days ago? Which is very nice, so you kind of know the timing of it. And the last one is, which is many of you like flags, which also goes back to trend, right? Bull flag, higher high, higher low. Bear flag, lower low, lower high, right? So when you take a look at this, those can be found at the top right, okay? So when you look at this, what you're going to notice is where it says breakout, example given, which one? Microsoft did a breakout today, brand new high. If we take a look and say, well, which one is actually breakout testing from yesterday or Friday? American Express. So the nice thing is some people, they like simplicity. The thing is, by having what your homework is, I want you to create scripts, which, by the way, are scans. And I want you to create one super view for yourself. For who? Yourself. What interests you? Do you like relative strength? Do you like looking at whole moving averages with those color green, etc.? Do you like bounces? Do you like breakouts, crossovers? Whatever interests you. I want you to create that view for yourself, okay? Now, the second thing that I really want you to do is I want you to make a list of your own stocks with your super view of how you track price, momentum, trend, relative strength, and the timing of the entries. And I want you to look at your positions and say, how are my stocks doing? Or do you have are you coveting other stocks that might look a little better than yours? Now, I think we've all been there. I have. Okay. But that's what I want you to do for homework. Number one is make some column headings. You could use the scripts that I have right on my Twitter page as examples. Scripts not guaranteed for accuracy. Said it 4 times. And the biggest thing to also remember is I want you to then make a list of your own stocks that you could look at and say, I want to start tracking my own positions with this. Second, also looking at new candidates as well. I wanted to do this class all in, well, I wanted to put it all in one class. This would also be very good to go back to review and to say, are you clear on why are we using the columns? What is the purpose of it? And how does it become a routine? This has been recorded. What we did is we went step by step, last, bid ask, net change. Why do we have this on here? We talked about the purpose of that, okay? You got to remember is that these columns are oscillators, okay? Like a relative strength, like a moving average crossover, like moving averages, etc. So I'm out of my time here today. I also want to make mention of one other thing is you can, for example, Remember to follow us on Trader Talks with Schwab Coaching. It's free. All you got to do is subscribe. And also with that, just remember is that you could see all of our new upcoming content, but also all of our posted content as well. And also, I want to thank Brent Morse and all of you. And my goal today was to really kind of have a class that we could point to, that if you said, James, how might an investor kind of find stocks? 90 to 95%, probably closer to 95% of all the stocks that we show in our classes come from the understanding of using what I told you in the three indexes that we talk about, Dow, NASDAQ 100, and the S&P 100. Okay. With that said, stay tuned for our next class coming up. Next class coming up right after us is going to be trading cover calls and short puts with Michael Fairborn. I'm out of my time here today. Remember, with what we discussed, it was done for example, illustrative purposes only. And also remember that all investing involves risk. And with that said, I'll be back on tomorrow morning at 11 a.m. Eastern on using options as a stock investor. This has been the class on trading with technical indicators. Thank you so much. Take care. Bye-bye.